Thank you, Senators. Good afternoon.
Please proceed.
Yes. Thank you. Today I'm presenting Assembly Bill 1024, which is designed to expand access to the California's low-cost auto insurance program by authorizing insurance agents and brokers to sell low-cost auto insurance through an internet website and to sell the insurance from a list of nearby agents as specified by the bill. Californians who meet a minimum income threshold and have good driving record and are eligible for discounted insurance coverage. By providing the access to this program, we reduce the number of uninsured motorists on the road, which will save taxpayers money and provides a proper remedy when somebody is involved in a traffic accident. So we want to, in essence, reduce the amount of uninsured motorists in the community, which this bill goes a long way to accomplishing. I also want to make it very clear to all of you that initially there was some concerns expressed. There were some oppositions who expressed concerns on the bill. When we amended the bill on the Assembly side, that eliminated the opposition, and we don't have any known opposition to this bill currently. And it received bipartisan support on the Assembly floor. I think it was might have been unanimous, if I'm not mistaken. And I respectfully request your support for this bill today. Thank you.
Thank you, Mr. Wesso. Testimony and support.
Right. Ignacio Hernandez on behalf of Consumer Watchdog. We are the sponsor of AB 1024. When we initially created the California Low-Cost Automobile Insurance Program, we wrote it in a very narrow way to ensure that we had brokers and agents who were licensed specifically to be able to sell this type of policy. We wanted some controls over that, which was an upside. The downside is that we didn't anticipate the extent to which the internet would become such a force of interaction for the community, for California. So we now have is a situation where we have to include in the statute that we can place enrollment options online. So essentially this bill would do two things. On the mylowcostauto.com website, which is operated by the Department of Insurance, there would be two options. You can select an authorized broker who sells these policies in your area, look up the directory, or two, you can go through the steps to identify if you are eligible for the program, which is already on the website, and then at the very end, there's a button to go ahead and enroll. We worked it out with the opposition to make sure that we do not have a preference for one particular broker or entity over another. It's still randomly assigned for processing, and the commission is randomly assigned. And that's why we have no opposition. It just kind of brings the program into the technology age, and we ask for your support.
Before we go to our next witness, you're the sponsor?
That's correct.
Of the bill? I did have a couple of questions. First of all, one of the reasons you said the need for this bill is obviously to make low-cost auto insurance more available and more accessible, thereby allowing for the internet. But the other reason you state is the reason for the bill is that it would reduce, in hopes of reducing uninsured motorists. The market that would be attracted to this in that regard, wouldn't there be many cases where certain socioeconomic groups don't have access to computers or are not technologically there yet? How are they going to really benefit from this?
Right. Well, obviously that's a challenge on a number of fronts in California, because we do have communities and individuals who don't have access to the internet. I can tell you what really spurred this bill was that we work with local community organizations who go out to community fairs, for example, with local elected leaders and whatnot, and bring in individuals who meet certain thresholds of economic status. And then they sign them up for certain programs. When we had Healthy Families, when we had other types of social, mental health services, signed them up right there on the spot. And the one thing that could not be done, we could provide them information on low-cost auto, which is what we did, but we could not enroll them right there on the spot as we could with all of the other programs. So that's the type of work that we will continue to do, except we will now have the ability, what we've been calling the button, in that situation where we can actually enroll them in all of these other programs, but also in low-cost auto, so they can walk away covered. And so that's where we're going to do our best in terms of outreach for those individuals who don't have access to technology. But for the communities that are the individuals that do meet this threshold but do have technology, this would also make it easier for them.
Yeah, because I have communities in my district where high school students don't have computers at home, so they're all sharing. Several are sharing one computer at school or the library and so forth. So I think this is a great bill. In fact, I would love to come on as a co-author if it's possible. But I think we ought to address maybe in another piece of legislation that accessibility issue to technology, and how maybe some kind of a program where people are trained and then they have a place to go.
Sure.
To go use it.
Yeah, thank you. We look forward to working with you. I can't speak on behalf of the department, but I know we are trying to be very creative in our outreach efforts, so thank you.
Thank you. Mr. Norwood, you?
Chairman and members, John Norwood on behalf of insurance brokers and agents of the West. We appreciate working with the author and the sponsors to make improvements in this bill that allowed us to remove our concerns about it, and we'd urge your aye vote. Thank you.
Thank you, Mr. Norwood. Senator Correa, you have a question?
Yeah, I just wanted to really ask the same question you did to the sponsors, which is real purpose of this bill is you didn't anticipate the change in technology when the first bill was first brought up. That's the real purpose behind the bill, I think. And second of all, following up on Mr. Calderon's comments, and actually your comments, which are when we sign up folks for Healthy Families at our community events, people sign up just filling out the worksheet. So what you and short of a new program, as Senator Calderon's talking about, do you envision here a situation, a portal somewhere where you have a wireless laptop somewhere where folks can actually sign up for these programs?
Yeah, well, our experience, and I've actually gone to some of these fairs in other contexts, where we have community groups go out and have these health fairs and whatnot, and they actually sit there with computers, sit down with individuals and get them signed up. So we continue in terms of our outreach efforts is have those types of programs, and certainly there is outreach funding that is made available for that type of work, and so we would definitely try to include that. I know the department would be key.
The natural follow-up comment or question would be, if you can make that portal simple enough for some folks to do that, either from a high school or kids graduating from high school getting their license, or from, again, a community fair where people can do it readily, easily enough to do it. So we won't have to wait till the next legislative effort to move ahead with this program.
Great, thank you. We will do that, and so for those listening, it's mylowcostauto.com is the website we'll look for.
And I'd also like to sign up as a co-author to your bill.
Thank you. And I just wanted to add to your comments, Mr. Senator, because I think they're right on point, how this bill will open up an enormous window of opportunity to new technologies within the computer email framework. Just imagine a Facebook page that can inform people. You don't need a computer anymore when you have the, access through your phone now. They have phones that have access to the internet now, and you, without even owning a computer, you can get access to information about signing up through this program directly through your phone. So we're very encouraged by the fact that this bill will amplify people's options and the technologies that they can use, whether it be a phone, an iPad, a computer, a nonprofit in their community, a library. This will help get affordable insurance to the deserving community members in California.
Thank you, Mr. West. So before we go any further, we do have a comment from the Vice Chair, but let's establish our quorum first. Secretary, please call the roll.
Calderon.
Here.
Calderon here. Gaines.
Here.
Gaines here. Anderson.
Here.
Anderson here. Corbett. Correa. Present. Liu. Lowenthal. Price. Weiland. Here. Weiland here.
Okay. Statement from our Vice Chair.
Thank you. I want to thank you for working with the insurance agents and brokers as small business owners. I think that's critical, and it also provides another outlet. If you don't have the internet access, hopefully you get the phone number of an agent locally that's handling the program. So I appreciate that. Okay.
Thank you.
Department of Insurance.
Appreciate your vote.
Thank you, Senator Calderon. Michael Martinez here on behalf of the Department of Insurance. Just wanted to say we're proud to support this bill and do appreciate the amendments that the author and sponsor took to address concerns from stakeholders. And certainly under this Commissioner Jones, he certainly will continue to think creatively on how to outreach to those individuals, those California consumers and families that can benefit from the low-cost auto program. So with that, we ask for your aye vote. Thank you.
Excellent. Thank you. Anyone here else to testify in support? Seeing and hearing none. Anyone in opposition? No opposition. No other comments. Is there a motion? Bill's been moved. Call the roll.
Calderon.
Aye.
Calderon, aye. Gaines. Gaines, aye. Anderson. Corbett. Correa. Correa, aye. Liu. Lowenthal. Price. Wyland. Wyland, aye. That measure has 4 votes.
Thank you very much, Senator.
Anderson, no.
Measure has 4 votes. We will keep the roll open. Before I call the next member up, I want to make a couple of announcements. First of all, I want to welcome Workers' Comp Executive. They're here filming on one of the measures that we'll be hearing today. Welcome. Glad to have you here. And also the announcement that item number 4, AB 999, for now has been taken off the file at the request of the author. Now we have Assemblymember Fuentes. Please come forward.
Good afternoon, Chairman, Senators. I am presenting to you today Assembly Bill 228. This bill clarifies the ability of the State Compensation Insurance Fund, SCIF, California's self-supporting not-for-profit workers' compensation insurance carrier, to cover the out-of-state employees of the California companies that rely on it for their workers' compensation insurance. This is the current practice in 16 other states. Right now, a California employer that is insured with the State Compensation Insurance Fund, or SCIF, must obtain at least one, maybe more, separate policies to cover their employees who work outside the state, because California's insurance code does not explicitly give the state fund the authority to provide that coverage. This bill clarifies the insurance code to allow the state fund to provide workers' compensation insurance for every employee that works out of the state of California and for a California company, including any who work out of state, provided that the majority of the company's operations and employees are located in California. This will significantly streamline the insurance process for California companies with out-of-state employees. Instead of having to go through the application process with 2 or more insurance companies, companies could obtain coverage for all of a company's employees from SCIF in a one-stop shop, saving time and money. Chairman, working closely with your staff, I have taken amendments that address many of the private carriers' concerns, and I respectfully ask for an aye vote.
Thank you, Mr. Fuentes. Witnesses in support?
Mr. Chairman, George Miller on behalf of the State Compensation Insurance Fund, the sponsors of the bill. I think it's important to note that the bill is really about servicing California's small employers, because those are the policyholders that make up SCIF's book of business. It's the small employers, and in large part, oftentimes, employers that can't find coverage elsewhere. In today's market, it's a pretty soft market, and there's quite a bit of availability of coverage. But as most of you, having been in the Assembly and now in the Senate, you've been here for quite a while. You saw the last hard market. You were here when we were going through that market and making all the reforms to try and address the issues that were so detrimental to the small businesses of the state of California. And what we seek to do here is to make sure that employers headquartered in the state of California have an available market, and if the market happens to tighten for them out of state or what have you, that we can, if it serves the state fund, and serves the employers. Make sure they have an available market as well through working with other carriers. With me today, I have Mr. Tom Rowe, who's president of the State Compensation Insurance Fund and far more of an expert than I am on the issue.
Good afternoon. The only thing I can really add to the testimony thus far, because I think it really did a great job of describing what we're trying to do here, is to recognize that AB 228 attempts to simplify and provide access to all California employers to the kind of product they need for workers' compensation. We have been engaged in a variety of processes and activities in conjunction with independent agents and brokers in the state of California to help improve the quality and the competitiveness of the products we offer. And second, really only to price concerns, is the issue of modest out-of-state coverage for core California employers. So we present this as a clarification and look forward to your support.
Thank you. More witnesses to support?
Rich Mateus, representing California Farm Bureau Federation. We represent 31,000 family farmers here in the state of California. Many of those members secure their workers' compensation insurance through our association, and State Fund is our provider and has been our provider since 1943. Many of our members do farm in multiple states. That's particularly true of the produce business, but Arizona, Nevada not so much, but Oregon, Idaho, and some other states. So not uncommon for a company based here, a farmer based here, to do some business in some of those other states. And so this bill would just simplify their process of only having to secure one policy through one provider instead of having to do that in the multiple states in which they farm in. So for those reasons, we support this bill and urge that you do so as well.
Thank you. Anyone else here to testify in support? Please go forward.
Thank you, Mr. Chairman, members of the committee. My name is Clark Payne. I'm the CEO of the Independent Insurance Brokers and Agents of the West, which we represent thousands of independent brokers that sell a majority of workers' comp policies in California. In addition to those that have testified, we've reviewed this and are pleased to express our support of AB 228, primarily for what's been said. The current process is inefficient and costly for the broker and the policyholder in terms of placing one policy with the state fund for coverages in California and then having to find another company to place that out-of-state business. So this change will give another option to brokers who then can better service their clients. In effect, then this change will be easier for brokers to do business with the state fund and will benefit both the broker and the policyholder. So for those reasons, we support this bill.
I have a question. So do you represent other work comp insurers as well?
Do we represent our members? Do place business through other workers' comp insurance companies.
What is your response that we're going to have shortly from opposition that this bill would create an unfair advantage in the marketplace?
Well, I don't know that it's from an unfair advantage. I think from the broker's perspective, they're trying to take care of their client. So in terms of placing the business, their customers and in their best interest in trying to place the insurance. So the tax status of the state fund versus, my perspective is that there's a lot of other components in that decision, and I don't know that this particularly meets that or fits that qualification.
Mr. Chair, I also have a response to that, too. In a former life, I actually used to adjudicate workers' compensation claims, and through my course of working in that field, we came to understand that SCIF is a insurer of last resort. And so fortunately, we've had a lot of amendments made, and we've addressed an awful lot of the problems so that insurance is now readily available to those employers. There was a time, though, you'll remember, where workers' compensation was not easily accessible to employers, given the experience modification and the different sort of challenges that the premiums held for employers. And so by virtue of the fact that this is a state creature for last resort for employers, the idea of not being able to afford them, the employers, the opportunity to have coverage that currently exists in California and extend that slightly to out-of-state operations, I think, begs the need for this bill.
Okay, thank you. Anyone else in support? Seeing and hearing none, anyone want to testify in opposition? Please come forward. Go by yourself.
Want to testify in opposition is a funny way of putting it. But in any event, Mr. Chairman, members, Theo Peos in opposition to this bill. I'd like to acknowledge from the outset, number one, the amendments that were taken by the sponsor and the author. Clearly, the bill is in much better shape than it originally was. And secondly, I think we have to, from time to time, take a minute to acknowledge the great work that SCIF had done when our crisis was in meltdown mode, and they were serving about 60% of the California market. Without their participation, we would have been in a heap of trouble. So I think on the outset, both of those deserve mentioning. The second point, however, is correlated to our opposition. SCIF was founded in 1913 to serve California because at the time all the workers' comp rating and all the workers' comp riders were strictly out of New York. The California market hadn't really matured yet. And so they were constitutionally created as a way to serve the California marketplace. We believe that this is a huge departure from that mission. Yes, it sounds like, well, this is just a convenience for California employees who happen to have some employees out of the state. State Fund is actually not there to be a convenience for employers that also happen to employ people out of the state. Our carriers would like to serve that business and do compete for that business. Many California companies that our members don't write, we will write in other states. We've ceded much of that market to State Fund here in California. Clearly, that was the appropriate thing to do. But in other states, we will write that business, and we want to continue to write the business. We do not believe that the role of State Fund is to go outside of the state and compete with us. They enjoy a tax preferential status for purposes of federal taxes. They're tax exempt. So their cost structure is much different than ours. We believe that's an advantage in the marketplace. They have, in exchange for that tax exempt status, they take the role on as provider of last resort here in California. But to take that advantage across state lines and compete with some of the private companies that are putting private capital up to write this business in a way where it costs them more, we believe is just unfair. What we are talking about here is competing against basically a quasi-state agency outside of the state territory, and that to us seems a huge departure. When you talk about businesses where a majority of their business is in California, that's a lot of businesses. We're not talking about a huge employer that might have a dozen or so employees out of the state, or a chain of franchises that might have 2 or 3 stores outside of the state. If 49% of your employees could be in another state, that is a lot of employees. In fact, I don't believe that any one carrier would have that much book of a business in any other state. So to put this in context, we believe that the bill is still too broad. Thirdly, because State Fund does play such a vital role in California, and we don't want to overblow this concern, but the fact of the matter is cost drivers are up in California. We are not expecting the type of meltdown that we had a number of years ago, but there is cause for concern in the workers' compensation market. There may be another time here in the near future we're going to be calling upon State Fund to be taking a lot more business than they're taking now. We need to be sure that they're in a position to be able to underwrite that business, that they're a healthy enough fund to do so, and if they have assets that are at risk in other states, are they going to be able to do that? We do know that the bill now is amended, so the Department of Insurance takes a look at that after 3 years. We believe that that amendment is incomplete. I have not seen a bill where we study the effect of that bill within a time certain, and we don't sunset the bill's authority. So what happens if the DOI comes back and says, well, we have looked at it, and as it turns out, we are putting policyholder assets in trouble by allowing them to write over state lines, and there's a problem. Well, what are you going to do about it? Now you have to get a bill passed. I think that it is appropriate here to include a sunset provision in the bill to ensure that after the DOI does their study that if there are problems, the authorization to allow State Fund to write in other states has gone away. At the same time, of course, if the study comes back and says no problem and it has been a convenience for California employers, then we would expect that it would be reauthorized, just like we do with every other bill that we put a sunset provision in that passes this legislature. So we just hope that everyone would just pause for a minute and consider the fact that this is a sharp departure from what SCIF is doing now, that we do think that there are implications on their solvency and their ability to serve California market, and thirdly, that because of their cost structure and their tax-exempt status, we do believe it's unfair for them on that basis to be competing with our writers in such a large way in other states. For those reasons, we remain opposed to the bill. Thank you.
Thank you. Did you have something to say?
Mr. Chairman, yeah, I had a couple comments, and then I'll probably turn it over to Mr. Rowe. I don't have eyes in the back of my head, so I don't know whether the Assemblyman wanted to comment. But a couple of things. On the competitive advantage that our tax status confers upon us, it's conferred such a great competitive advantage that we've gone from 56% of the market to 16% of the market. So it hasn't really worked to our advantage there that I can see. In terms of employers employing people out of the state of California, one of the reasons State Fund maybe was created because there wasn't a mature market in California, but there is a mature market in California, I agree. But we write people that others won't write. I don't think there's an insurer in here other than State Fund that writes the roofing contractors. I don't think there are these guys, you know, the steel erectors. We write people that can't get coverage elsewhere. Big businesses go elsewhere or they self-insure. So I think that, you know, there are a lot of businesses, smaller businesses, and you know, I think some of you have heard me use the idea or the case of a guy that has 4 Napa Auto stores here or something in Northern California, and then he opens up one in Sparks, and then maybe a second one in Reno. You know, he's a small businessman. We're talking about streamlining, making it easier. Or the small startup company that has one salesperson in the Northeast, one in the Southeast, one in the Northwest, one in the Midwest. So you actually literally have 4 or 5 employees in disparate parts of the country. Now you have this one little startup business in Rancho Cordova or what have you. It has to navigate all of those different states and finding coverage when they could go through one broker here in the state of California and take care of that. Those are not the people that others want to insure. But those are the people that the State Fund may, in fact, do so because it is, State Fund is a state, essentially an agency of the state, and they're here to try and help facilitate business in the state of California, keep their doors open and operate in an efficient manner. And I don't know if Mr. Rowe has anything to add.
Before you speak, sir, you're with State Fund, right? Would you, in your comments, address the dynamic that Mr. Miller just expressed, that you went from 56% of the market to 16%. Can you explain to me why or how you feel that happened?
Absolutely. Not to go too much into history, but the workers' compensation market in the state of California broke down in the earliest part of the last decade. And private capital fled. Some of them collapsed and declared insolvency. Some of them just decided to write their other lines in other states, which they are free to do as private capital. We, however, are chartered by the legislature to do one thing, and that is support California employers. So in that process of capital exiting the market, we went from our historic market share, which is generally in the 20s, to 54% at our peak. At that point, both rates adequacy had returned, reform was passed by this great body that was very effective, and capital returned to the market, which they are free to do. As capital returned, prices were bid down. State Fund, as you've heard, is obligated to serve those that have few choices. We require ourselves to keep discipline because our balance sheet's the only thing that stands between us and an injured worker. We are no encumbrance on the state of California. So we maintain discipline. The private market bid prices down, pulled business away from us. We're now at 15% market share, which is typical at the softest end of the cycle. If you looked at the cycle of the last 97 years, you'd see we ebb down to the mid-teens. Then as the capital disgorges profits, doesn't make enough money, they leave the state and we swell again. Is that responsive enough?
Yes, it is.
I have one other small add.
I'll let you continue. Let me just ask, what percentage then, now that conditions are different,
right,
you're now at 16% of the market, and with this legislation and other things that you're doing, hope to be higher. What is the target for you in terms of what percentage of the market you think state funds should serve?
That's a great question. And strategically, we're focused on the needs of California employers. So we actually don't target a volume. We retain enough surplus to handle the market if and when private capital leaves again. But we don't aspire to a specific share. We want to serve those employers in our state that see value in our services. So we really don't have a strategic vision of what that should be. Historically, the average since 1914 is 28%. So year in, year out, it's 28%.
Mr. Chair, I would add, though, just very briefly that...
Hold on. Do you expect to exceed that with this legislation?
We expect to exceed that when market cycles dictate we do. So we do not...
With or without the legislation, you expect to exceed that?
Well, yes, that's another good point. When capital leaves, employers that have modest multi-state needs have to come back to us, and their brokers have to go find multiple out-of-state policies. So we create friction for California employers. I'd rather have California employers focused at running their businesses and employing more Californians. That's what AB 228 does.
Mr. Fuentes.
Briefly, I think this is a very good sort of picture as to how healthy the insurance market is out there. I mean, because a SCIF is at 15%, it means that there's a lot of competition. I don't think that we would have any opposition today if we had not had the successes in the legislature with the worker compensation reforms. SCIF would still be managing a big portfolio, but because the insurance industry is working, because it's robust, because private assets and investor assets are in the market, we have a very successful system today. So let's think about the 15% of the market that we're talking about. If they're with SCIF, and it's not meant as a disrespectful sign to them, chances are that they still very much need this product, workers' compensation product, and they can't get it anywhere else. And so when you think about that employer, to extend the capability of offering them coverage for a minority part of their business out of state lines, I think is a very simple thing to do. It's a very pro-business approach here.
Thank you. Senator Gaines, had a question?
Thank you. I just have questions in terms of, number one, I'm trying to define, in my mind, the role of State Fund. And it's a company, generally speaking, of last resort. And you have challenges within the marketplace, and so you're going to the State Fund to provide that coverage. I think the adjustment of percentage of market share is natural, and based on the capacity within the marketplace, that will adjust upward or downward. My concern is that an issue that Mr. Payos brought up with regard to capacity. So if you have, based on his statement, you could have 49% of these employees out of state, we could be using state fund capacity to insure them as the market turns bad, and then limiting capacity within our own state, which was the original intent of SCIF, was to help employers within the boundaries of the state of California. And so, yes.
It's a great question, and I don't want to get too technical, but it's the way we'd actually operate the program. Any individual client may have up to 49% of their business outside of the state as it's currently written. And the example I would use is a California contractor who's headquartered in the mountains or just east of here, who picks up a big job in Nevada. Normally they have 10% of their payroll out of the state, but they could end up picking up the big job and for a period of a year, 18 months, have more of their payroll outside of the state. So we want to be able to service the ups and downs. Internally, we would limit the capacity we'd ever deploy out of state, but it's better done at the aggregate enterprise level rather than because that's much less volatile than an individual client. And contractors are a dominant part of our book, and they will move to where that business is, even as California businesses.
Okay, but aren't there current allowances for an increase of employment for an out-of-state job?
Temporary. It has to be temporary. It has to fall under the definitions of temporarily out of the state. And you're right. If it falls under those provisions, we can do it. If it's a longer-term project, the contractor could employ citizens of Nevada. They would actually require contractor could need to comply under Nevada law, even though we have the ability to cover temporary outside of the state.
I've got concerns about the legislation. I think the intent is good, and I think I can see where you want to address, employees that may be out of the state. Is there a way that we can look at amendments? I don't know if the author would entertain, like a sunset, I think would be helpful. If we're going to get this data from the Department of Insurance in 3 years, it would be nice to take a look at that data and then make a decision as to how well it is or is not working. I guess my other concern is the percentage of employees outside the state. If it's truly a large number of employees outside the state, I don't think that role ought to be filled by a government-sanctioned entity that has tax advantages and therefore an opportunity to maybe better compete against private insurance carriers, and that is an issue in my mind.
Another good point, just a point of clarification. The way we'd enact this, we would use our existing reinsurance capabilities. The insurance code allows us to reinsure. We'd use an existing program, a program that's 15 years old, used in 16 other states by and large. So it's actually a mature facility elsewhere. The fronting company, as required by the legislation, is an admitted for-profit entity. So we would pay, through the fronting fees, the imputed income tax of the fronting carrier. So there is no exportation of tax-free status outside of the state of California. This legislation does not do that. So outside the state, the playing field is very, very, very level.
I'm sorry, go ahead.
Second point, the way we were enabled by legislation, while we have a core mission to serve those California employers who cannot find insurance elsewhere, we also have a mission to provide coverage to any California employer that asks us for it. So our current book is made up of small businesses, entrepreneurs that literally can't find it anywhere else. Entrepreneurs today, unlike 1913, could start a business in Silicon Valley, hire a web designer in Austin, Texas, a salesperson in Chicago, 3 other support staff up and down the East Coast. The private market won't provide coverage for a handful of remote workers.
Well, and I was wondering if there's a way to address that issue without, I guess my fear would be an advance of your role where you're actually a market player in other states across the nation. When I don't see that as the role of the state fund, that was not its original intent.
And we would agree with you.
I just wanted to address one point. It's been said a couple of times now that state fund enjoys a tax benefit, and that is true in large part because we need to afford those folks who need insurance. So this quasi-state creature was created. But I think it's also important to know that SCIF doesn't have any shareholders. The shareholders are actually the employers that contract with SCIF. So, for example, when you talk about capacity and solvency, if SCIF finds themselves in a place where their premiums that they collect outweigh the ratio between the assets and the liabilities, then those premiums get reimbursed to the businesses. And so when I put myself in the employer's shoes and realize that I'm likely to be with SCIF because it's the only place that I'll get the insurance, and as a result of how they are created, that I will get a reimbursement if for some reason there's a solvency over sort of capacity issue, that's, I think, a really important thing to weigh when we're talking about tax benefits. It's not as if they're market players all of a sudden. It's meant to deal specifically with the needs of California-based businesses.
I'm just trying to figure out a way to take a look at it a few years down the road.
Sure.
And see how it's working. That's why I'm asking for the sunset provision. If it's working well and it's not, I'm worried about the displacement of a lot of business in other states who operate under different legal environments too. Often it's much easier to get coverage in other states than it is in California because of our litigious environment here.
Well, and I would just say that, that would be a fantastic problem to have, as if we were trying to get more out-of-state business for California, but the bill doesn't endeavor to do that. Again, it's intended to help the employer that has a business here in California and who has an opportunity to expand outside of the state of California. I'm not sure that a sunset would address any of the concerns that are brought up when it comes to solvency. I mean, if we were having a conversation to say that maybe a percentage of the portfolio or the solvency sort of issues and capacity need to be maybe reported every couple of years, I can understand that. But to put a sunset is not going to a claim file doesn't know its origin. It really doesn't make a difference so long as the fund is solvent, is healthy, and is covering California employers.
Yeah, Mr. Chairman.
Payos, you had a comment?
Yeah, Mr. Chairman, thank you. I just want to make sure that everyone understood. We do write that business out of state, where some of those riskier policies we've conceded appropriately, I think, to state fund. We still do write that business in other states. So it's not like you can't find insurance out there. In fact, what's happening now with those employers that are out of state, they all have coverage. So it's not like you just simply can't find it. Secondly, I think some of the examples the witnesses, the proponents have given, we don't necessarily have a problem with a technology firm in San Jose that has a remote employee out in Nevada and one in Wyoming. But what we're talking about here is 51% of the employees in California, and the rest could be elsewhere, and that's a much different entity.
Thank you.
Mr. Anderson. Senator Anderson.
Thank you. This is focused on the insurer of last right, and as a percentage, you also take insurers who apply. As a percentage, how does that break down? How many if you were looking at your portfolio, how many of these people can get insurance from no other place as opposed to ones that actually could file elsewhere?
That's a great question as well. We don't actually ask that question on the application. So the answer I'm going to give you is imprecise. And generally, the cut, what we do look at is accounts by size. So once employers pay less than $1,000 for premium, and we have minimum premiums at $500, where literally they start with the first employee, it's usually a pretty good bet that those businesses can't get insurance anywhere else, even though we don't ask for that. That makes up about 45% of the policies, but a smaller percentage of the premium. But in the rest of the group, we don't discreetly ask the question. So we have roofers, we have high hazard classes, but we don't ask them if they've gotten a quote from somebody else.
Okay, and if state fund were to pay taxes, what kind of revenue are we thinking in terms of, if you were a private, like some of your clients, what kind of a tax revenue will we be looking at to the state?
Well, last year we had net profits of...
We pay state taxes.
I'm sorry?
We pay state taxes.
And premium taxes.
Okay. What are the taxes that you're not paying currently?
Federal.
Federal. I'm sorry, that's right. What would be the federal taxes?
Well, we made $135 million last year.
I think it's important to know that would be, so let's say we're taxed at whatever the corporate tax rate is on that money would be money that would not go back to the businessmen and women of the state of California because of the way state fund operates. Money goes back to employers. They actually pay essentially a dividend back to employers for monies over and above their operating expenses.
I get that part. The concern I have is we don't know how many of these people are electing to be there as their first choice, not their last choice. And we're creating a work environment, a marketplace that's being subsidized by not paying federal taxes. I'm worried about changing the playing field. If you were able to tell me that you know how many people were there because they couldn't get private insurance, I'd be more inclined to support this bill. but because people can just go ahead and apply, and they're not competing on an even playing field with the private sector. Essentially what we're doing is giving a form of corporate welfare.
I understand the point, and you can argue level playing field all day long, and the private market does, quite frankly. We do exist for California employers through thick and thin. We can't leave this marketplace. We are here for the California employer. Every dollar we make in net profit at the end of any year is there to support surplus, to support claims paying abilities, which last over decades based on the nature of the injury. And if surplus is deemed to be divisible, more surplus than we need for the safe carrying of the company, not just for today, but we're at 15% market share, we have to be prepared for what the market's going to bring in 2012, 2013, 2014. So once surplus exceeds that number, we turn around and either reduce the cost of workers' compensation through credits that can stay in the pockets of California employers, or issue a dividend. So we see, and our mission is also not unique. There are 26 other state funds, 16 of whom use a program just like this. So we actually believe this is laser focused at the best interest of California employers. We want to make it easier for them to do business. We want to keep the cost of workers' compensation as low as we can for them. And we want their attention to be diverted back to running and building their businesses so they can hire more Californians. That's what this is about.
Senator, that's also a very dynamic question. If you had asked that in 2000, how many folks were actually ineligible to get, and it's not to pick on the private industry, but you would have known that there was a vacation of capital from the insurance industry and that there were no other choices. So to ask the question today, I think, is fair, but I think it'd be very unfair to judge the merits of this proposal based on a very robust insurance industry time. We need to have SCIF in place because it's important to Californians. It's not I would not characterize it as corporate welfare. This is about the well-being of California businesses, and it doesn't come at the expense of our revenues for the state of California. But if we do away with this model, or if we think or try to characterize it as a market player, then we're mischaracterizing the mission of SCIF.
That's a great point.
I think we've covered this. We're just colloquy now over and over.
I do think that there is a shift there, though. You said that you don't leave California, but yet that's exactly what this bill will do. It will take a state fund out of California.
Agreed. Okay. Oh, yeah, Senator Weiland.
I'm not even sure, because I imagine we'll keep the roll open. If I'm going to vote for this, I'm not going to in the first round, but I'm not going to vote no. I think there's a real place for the state fund, and I commend you, Assemblyman Fuentes, for really diving into this. I think you got a lot of grasp on it. I bought workers' comp insurance for 20 years, including the state fund. And although I think there's a role, let me just give you my take on what happened to that very volatile period in the market. Once we changed the law with good intentions and changed the way it was sold, we had two things happen. We had our costs escalating because we have applicants' attorneys, and we have attorneys representing dramatically more injured workers in the state than in other states, and we could have a whole hearing on that. And we got the change in the law, and we all know the politics of that. Between how that all worked is kind of fascinating. Schwarzenegger wouldn't have been able to do it, actually, without an initiative and negotiations with Senator Burton. But and I just want to say this: appreciating your role, it needs to be there. Can we get data on the percentage of the market and the policies themselves, like the number of policies and the premium associated with that, and that size of the market? Here's my concern. Here's the other thing that drove that down. State fund undersold, underbid, sold that stuff so cheap that they played a significant role in the destruction and the forced vacation of capital from this market. I saw it. I saw the bidding. It got to one point, the Beston Company, which rates them, would have said they're insolvent. Now, I don't believe that was your fault. I doubt you were there doing that at that time. But it happened because rather than remaining the insurer that's intended to be, and we need that, it, at that time, under the governance and the management, unfortunately helped destroy that market. Now, it's come back, which is good. It's healthier. It's better for everybody. I'd just like to make sure that in the future, and if we proceed with this, and I might support it, that we really do keep the state fund that type of insurer. That's what we need to do, because they are in a unique role and don't have the entire tax burden, and because they aren't subject to all the same things that the other insurers are. It seems to me it's healthier and good for the state, and I don't mind. I think it's good for us to make a decision. If there's a small employer who otherwise can't get it, or a difficult industry like roofing, I don't mind. I'm okay with them not paying federal taxes. We never get our share back anyway. And I'd rather use it to help those businesses. But I just think it's important to make sure you don't go too far out there.
Any other questions from the committee? I have some comments I'd like to make and some recommendations. We've heard a lot of testimony today and a lot of debate over concerns that the state fund's tax exempt status and possible unfair advantage in the marketplace. I've been also visited by other industry folk that are concerned about the fronting fee and whether it's an RFP or whether it's a single or sole source. You've heard about the sunset clause. I think it's important to a lot of the members here that there's a sunset clause. In regards to that in the bill, there's a report that was an amendment we added, and it's a report in 3 years by the insurance department. And one of the reasons for the report is to look at the impact of this class of insurance and whether the result is good or bad on the fund and its management, and whether or not the focus of California market has shifted or changed from with state fund. I know that you say you don't want to be out there actively marketing that you're going to take out of state offices or out of state businesses, but as a natural result of this, you're certainly going to make it known to every employer in California that you do have coverage for outside business. We could take a vote today. I don't know if you have the votes, to be honest with you. I would be very comfortable putting this bill off, working on a lot of these concerns, making it a 2-year bill. I would even be willing, if we can work it out before the end of this session, to have a special, maybe have another hearing. But my recommendation to you, Mr. Fuentes, is let's work on these concerns and try and amend the bill so it really does, in every way, perform and do what it's intended to do.
The concerns about a sunset or an aggregate cap and that sort of thing, I think are good conversations to have. I'm not sure that we would need a full year. I think that's something that if we worked with your staff as we have thus far, that we could come back with the chair's permission in a subsequent hearing in the next week or so. Sure. With amendments to see if those are amenable to the committee.
We can do that.
Very good.
What about the timing? It's a double referred bill.
Don, is it? I don't believe it is.
Oh, we're not going to go to labor, industrial relations?
Ron, I'm just wondering if we could waive the rule so that if we were able to come to agreement on what the language would be.
Would it go to labor? Because I know I'm on that committee, and it's usually the more technical work comp. You know, we add one today on rebuttable presumptions and that sort of thing. Or would it go there as a sales? I mean, it's more of a industry kind of issue. I don't know. Has it already been referred there?
I mean, it's my understanding that they're expecting to get the bill. Yes.
Well, I need some time to get some advice on that in terms of whether or not we can waive the or put off the industrial relations hearing until we resolve this one.
The other, Mr. Chair, I mean, I'm committed to obviously working with you and your staff. I mean, if it were the pleasure of the chair and the committee to keep this committee apprised, and if it didn't meet the satisfaction of this committee in industrial relations to come on back, then I'd be amenable to that. I'm just, again, concerned for the window of time that we have here. And again, a cap or a sunset, I mean, I don't think those are sort of long negotiated sort of conversations. I think that we could, with your help and your staff's help, and ideally the next committee's help, we could figure out something fairly quickly. And I'm committed to, you know, you've got me on tape to come back if it doesn't satisfy you.
What is the pleasure of the members here? You know, this is a situation I'm not comfortable or.
My preference would be to have it come back to committee so we know exactly what we're voting on. So if we could come up with some language that we could then hear again in committee, and we could call, I'm willing to have a special committee hearing to do that.
Subsequent to the industrial relations hearing?
Yeah.
Mr. Chair,
we could do it off the floor if we needed to.
Yeah. Yes.
Mr. Chair, just a question, and I agree. I think the putting some sunset language in does strengthen it, and I guess because each of us a little more comfort. But we're talking about bringing it back within a week or so, right? I mean, it can be done relatively simply. In addition to the sunset, what other amendments are you concerned about?
Just hold on.
I raised the issue about the percentage of employees outside the state of California. You know, because the way it currently exists with the state fund is you can have up to 49% of your employees outside the state of California. That would greatly change the exposure versus a marketing rep in Nevada, which I have absolutely no problem with, even if it's in a couple of states. But that was my issue. So
okay, I think what we can do is we can address these issues, I think, fairly quickly, and maybe Monday we can hold a hearing off the floor and dispense with this bill fairly quickly.
That would be great, because that would give me the additional week to get before Senate Industrial Relations, provided that we can do it next week.
Because I don't believe we're really far off from agreement here on some things, and you know, I think you ought to think about a sunset. You might think about some language in the bill that indicates you're not actively going to market your product as an out-of-state insurer, and that's the direction I think we ought to be going in.
Very good. We'll take those two ideas into consideration and come back.
Great. Okay. According to Republican staff, it's not referred to labor, so I don't know. Dave?
Early on, we heard from them, and I've got to say, but you're saying the record doesn't reflect it as official.
They've given us every indication that they expect to see it.
Maybe they think it's their jurisdiction and it wasn't referred to them.
So when would
Mr. Liu gets here, we'll
So when would the amendment occur?
We would do the amendments and then meet off the floor.
So we'd come back to committee and do amendments in this committee?
Then we come back and meet off the floor like Monday.
Okay, very good.
Okay.
That sounds like a solution.
Okay, we'll proceed with that action then.
Very good.
Thank you so much.
Senators.
Consent. We're going to dispense with a consent calendar before you leave, Mr. Weiland? Oh, okay. There are 4 items on the consent calendar, items 6, 7, and 8, and 9. Is there any objection?
Nope, so moved.
So moved. Call the roll, please.
Calderon.
Aye.
Calderon, aye. Gaines. Aye. Gaines, aye. Anderson. Corbett.
Aye.
Corbett, aye. Correa.
Aye.
Correa, aye. Liu. Lowenthal. Price.
Aye.
Price, aye. Wyland.
5 votes. We'll hold the roll open. Now we have Mr. Blumenfeld.
Yes.
Not here. Oh, there you are. I was looking on the first row for you.
Yeah.
That's very,
right here in front of you.
stealth of you.
Eager and ready.
Sir, sorry for the wait. Appreciate your patience. Now, anytime you're ready to present, we're all ears.
Absolutely. Thank you very much, Mr. Chairman, and thank you also for working so closely with me on this issue. This issue, the issue of protecting consumers from unsuitable annuities, has been around for...
Hold on. Keep the sound down, please.
You know, this issue has been around for many years. People have been trying to tackle this issue since early 2000s, and there's been a lot of valiant efforts, and there's a lot of... There's very strong feelings on different sides of this issue, and I think finally, you know, we're at a point where we've gotten consensus around this issue, and I'm very glad and fortunate to sort of be at the right place at the right time as that consensus has developed, and we've been able to put together a bill that no longer has any opposition, and that goes from a bill that for many years, and the idea of doing this for many years, carried tremendous opposition. The goal of the bill is to enact safeguards that will protect consumers from becoming victims of investments that are unsuitable to their financial situation and ensure that the financial and insurance needs and objectives of consumers that purchase the annuity are to benefit the buyer. Currently, there's no law requiring that insurers and producers collect information regarding specified criteria that must be considered in determining whether an annuity is suitable for a consumer's financial situation, such as the consumer's financial objectives, financial time horizon, liquidity needs, and existing assets. Therefore, there is currently no effective system to ensure that the consumer is protected from purchasing an unsuitable annuity. What this bill does is it establishes appropriate safeguards to protect consumers from unprofitable and often very costly annuity purchases. The federal Dodd-Frank Wall Street Reform and Consumer Protection Act that passed last year indicates that in order for California to preserve its role as the sole authority over regulating fixed annuities, the state must adopt comprehensive suitability standards for annuities by June 16, 2013. The federal legislation also stipulates that the comprehensive annuity standards must either meet or exceed the NAIC model, or the National Association of Insurance Commissioners model that was established in 2010. Therefore, what this bill does is it builds upon and in some sections exceeds the requirements that are set forth in the national model with respect to annuity suitability requirements, conforms to the current California law, and provides additional consumer safeguards to ensure that all consumers are adequately protected. As I mentioned, this bill currently has no opposition. The chair has been great. We've been working well together, and I deeply appreciate that, and I ask for your aye vote.
Thank you. Witnesses in support?
Michael Martinez here on behalf of the Department of Insurance, and we're very proud to support this bill and been working with the author and stakeholders in the author's office. As the bill has moved forward, we feel this AB 689 annuity suitability legislation is long overdue. Certainly, as conveyed in the committee analysis, there's been several years in the making of many stakeholders on many different sides working together, or perhaps at times not, but at least or not to roll consensus, but it's been certainly several years of striving towards an agreement, a uniform annuity suitability standard, and we're all very close in finding a legislative solution to establish these strong safeguards to protect consumers and seniors from unsuitable annuity purchases. And so I concur with what the Assemblyman Blumenfeld has said about wanting to have this bill be able to ensure compliance with the federal Dodd-Frank Act by June 2013 in order to avoid federal preemption, and that we feel that AB 689 does encapsulate a consensus among all stakeholders in order to, as of today, have no opposition to the bill. And so again, I want to thank many people who have been a part of this bill, and as well as the chairman's bill has been working forward and through the process to be able to have this work product that we have here today. So we ask for your aye vote. Thank you.
Yes, sir.
Mr. Chair, members of the committee, my name is Gary Passmore, and I'm here on behalf of the Congress of California Seniors and our many members across the state. We are one of the advocacy organizations that has been on this issue for many, many years, and we are pleased that we have reached this point and are very, very grateful to Assemblymember Blumenfield for getting us here, we believe, and the chair and others. Probably now more than at any time since we began engaging in this issue to protect senior consumers. Seniors are confronted with enormous financial problems and are oftentimes not as careful or feel desperation, and we think it's essential that the industry assume some responsibility for making sure that the products that are available are suitable, and that there is some training of the people that are making this information and these products available. And we strongly urge this committee to pass this legislation. Thanks.
Thank you. Witness of support?
Nicole Wertelman on behalf of the City and County of San Francisco in support. We are especially appreciative of the consumer protections in this bill for our aging population in San Francisco.
Thank you.
Casey Young with AARP, also in support. Just want to express our appreciation to the author and to the chair and everybody who worked so hard to get to this point. Thank you.
Thank you so much. Anyone else would like to come forward and testify in support?
Mr. Chairman and members, Ted Angelo with the Association of California Life and Health Insurance Companies. It's been a long road. We appreciate this committee's work on this issue. We appreciate the Assembly Committee's work on this issue, the author and the department for looking at technical changes, and we support the bill. Thank you.
Mr. Chairman and members, Tom Bone on behalf of the American Council of Life Insurers. We are here in support of the bill. We, too, have been on a long road on this with both the chair of this committee, the author here on this bill. Over the last 10 years, a lot of actually pretty good legislation has been adopted. I think this is the final and key piece to put the issue finally in a proper place. We appreciate all the assistance that everyone has put into this, and we're very happy to be able to support the bill.
Thank you.
Good afternoon, Mr. Chairman, members of the committee. Sherry McHugh, representing the National Association of Insurance and Financial Advisors. We are very pleased to support AB 689, as we were very pleased to support your bill earlier this morning. We are very happy that we are at this place finally where we're able to support a suitability bill, and we just thank all of you for all your hard work over the years. Thank you.
Thank you.
Good afternoon, Mr. Chairman, members. Julianne Broyles here on behalf of the California Association of Health Underwriters. Again, appreciate all the work on the bill and happy to be here in support and ask for an aye vote.
Thank you. Any other witnesses in support? Any witnesses in opposition? Seeing and hearing none. Any questions or comments? Bill's been moved. Senator Price.
Yeah, I just want to say I just want to add my congratulations to the author and sponsors and the chair and other stakeholders who've worked hard on this over a number of years. I think this is an important piece of legislation, especially for seniors, not only for seniors, but especially for seniors at a time when we know these issues are so critically on the front burner. And so I'm happy to support it. Would love to be added as a co-author, and look forward to supporting this bill as it moves forward.
Thank you. I recommend, as any member on this committee, to go on as a co-author. This is as well as myself. I believe I'm already a co-author, aren't I?
Yeah, you should be.
Yeah. But before your close, I just want to say, Assemblymember Blumenfeld, I thank you for bringing this measure forward and for working with the staff and myself to arrive at what I expect to be probably the bill regarded as one of the most important bodies of law that our respective committees have acted upon this year. And, I expect because of the Dodd-Frank bill signing, because the President supported and signed the bill into law, I think it makes possible for us to finally, after 6 failures and after a decade of attempts, to finally have this legislation on the governor's desk and I believe signed by the governor and acted into law as it should have been years and years ago. So with that, again, thank you. Closing comments by you?
I think you did a great close for me, so I'll just thank you for that close and for all your hard work on this, and respectfully ask for an aye vote.
Thank you. We have a motion. Call the roll.
Before you do the motion,
Yes, we are taking. Several people have asked, and I'm happy to add anyone who wants to be added as a co-author. I'm taking names, and we'll add them on at the next. The next.
Yeah, Senator Anderson also wants to go on, and I'd like to be a principal if that's possible. Call the roll.
Okay.
Oh, Gaines too.
Gaines, all right.
The motions do pass to Judiciary. Calderon?
Aye.
Calderon, aye. Gaines? Aye. Gaines, aye. Anderson? Corbett? Aye. Corbett, aye. Correa? Aye. Correa, aye. Liu? Lowenthal? Price? Aye. Price, aye. Wyland? Aye. Wyland, aye. The measure has to... Liu?
All right.
Liu, aye.
Would you like to be a co-author, Senator? This is on the suitability.
I like that.
All right. Yeah, we'll leave it on. We'll leave that on call. You have sufficient votes. We're going to leave it on call for the.
Great. Thank you very much, Mr. Chair and members.
Thank you. Please come forward, Mr. Solorio. We just straighten out some time. So, on T2, we didn't take a vote on it. So it's not a reconsideration. It was just a hearing. Just a moment. We'll figure it out. We'll get some guidance. Thank you for your patience, Mr. Solorio. Please proceed.
Thank you, Chairman and Senators. This bill would clarify that a captive insurer meeting the statutory criteria of the Public Resources Code as a post-closure financial assistance mechanism is recognized as valid insurance under California's insurance code. I believe this measure is consistent with a law enacted by the legislature in 1988. I also do want to mention that I accept the technical amendment offered by the committee. With that, I ask for your aye vote and do have a witness in support.
Yes, testifying in support.
Gene Urban on behalf of Waste Management. I will try to be brief. Waste Management is the largest environmental service company in the state, nation, and perhaps world. We have operated a pure captive insurance entity domiciled in the state of Vermont since the 1980s. It provides coverage for the financial assurance requirements that we are required by state law to provide for closure and post-closure of solid waste facilities and hazardous waste facilities. This bill was introduced by Mr. Solorio at our request to, in my opinion, combat a willful misinterpretation of the law by the then Integrated Waste Management Board, now Cal Recycle. We petitioned, pursuant to the APA, to have the state statute that was enacted by Ms. Figueroa back in the late 1990s properly interpreted. That petition was not accepted. So we're left with two options. We can come back to the legislature and clarify, or we can file a lawsuit. We elected the former, not the latter. We are trying to clarify that the use of a pure captive insurance company that only insures our facilities is not prohibited by the state of California's insurance code. We do not relax in any manner the provisions of the Public Resources Code. Let me say one last thing, and I'm appealing to you for your help in this regard. This is the regulatory wonderland in which we operate. We are permitted to use our captive insurance for Department of Toxic Substances controlled licensed facilities. We are not for CalRecycle licensed facilities. The basis upon which CalRecycle made their decision is, in our opinion, wrong. Mr. Rakich from your analog committee in the other house agreed. I believe Mr. Cooley has also agreed. We're simply asking for clarification. No relaxation whatsoever of the existing requirements. Has to be authorized by federal law, domiciled in the United States, an A- best rating, submit to any audit at any time. We comply with all of that. So we're asking for your aye vote. Thank you very much.
Thank you for that, sir. Any others like to testify in support? Any questions so far? Seeing and hearing none. Got a bill motion. Testimony in opposition? There's always one in the bunch.
Mr. Chairman, members of the committee, and Assembly Member Solorio, my name is Mark Aprea. I am with the firm of Aprea McKaylee. We're testifying in opposition on behalf of Republic Services. I believe you have an opposition letter also from Recology and from Californians Against Waste, and I think there may be other solid waste providers that are also opposed. We are reluctant in our opposition to AB 480, but we must. This bill has been in print for just 11 days, and it is designed to benefit a single company. CalRecycle currently allows 12 distinct financial assurance mechanisms for solid waste landfill operators and owners to provide assurance to the state to maintain the care for solid waste facilities. Public Resources Code 43601 allows CalRecycle to adopt regs which reasonably condition the use of one or more financial assurance mechanisms. And in their 2011 regulatory calendar, CalRecycle has initiated a rulemaking process for the review of those regs for captive insurance companies covering landfills. So AB 480 is a surprise measure to us. We're frankly disappointed, particularly given our relationship with the sponsors of the bill and our ongoing discussions throughout the year, that this measure and their intent to move this bill was never brought to our attention. Now, they're certainly not obligated to do so, but it results in having a split within the industry having to be, if you would, brought before you. So CalRecycle has indicated that the use of captive insurance in California may increase the state's unfunded liability for landfill financial assurance. We are concerned that should the legislature adopt AB 480, that CalRecycle will be forced to approve captive insurance companies and increase their estimates for California's unfunded liability and thereby increase the financial assurance obligations of others. Now, whether this is true or not, as I'm sure the proponents will say, oh, that will never happen or it can't happen, the fact of the matter is that we don't know the answer to that question, and we cannot neither prove nor disprove it to you because there hasn't been an opportunity for the stakeholders, including CalRecycle, to engage in a discussion off campus, if you would, and come before you with a argument that or a bill that is fully fleshed out. So in the absence of that, and because there is a risk to the rest of the solid waste community, which may thereby cause us to have to raise our rates to our customers, we're asking for your no vote. Thank you, Mr. Chair and members of the committee.
Michael Endicott on behalf of Sierra Club California. I think we also have a letter on file, and I hope the member did see both our earlier letter and this one to the previous version, and as well as this measure of the bill. I won't belabor some of the points, but the reason that Sierra Club California is here today in your committee is that we view the insurance process, especially when you're talking about sites that are being closed down, to be part of a Rubik's Cube. It depends on the interaction of a lot of items, especially when a company is going to be closing a site and moving away. And it's our concern that this bill would actually change things in a way that shifts the burden to communities later on down the road, makes them the self-insurer in essence, potentially, and so that we don't think this bill should be passed out of this committee. This is not to say anything that Waste Management isn't a good company, that Vermont isn't a good state, and in fact, maybe I'd love to shift my homeowner's insurance to Waste Management if they'll take me. But we do think that it's really critical that when you close a site in a community, particularly of a waste management site, you have different kinds of oversight requirements, you have different kinds of agency participation, and you rely on actually the person of the site that's closing it to close it properly. And we've had problems with landfill sites that as they've been closed in the past that we're trying to deal with, particularly with the state's budget being the way it is right now. It is really not a good idea to shift the potential for more burden down the road for the state or the local communities to clean up those sites. And while we're in the middle of the budget discussions, many sites, once they become problematic, if they do become problematic, the local government's remedy was to go to redevelopment agencies process to actually clean up the site. And we may not have that anymore. So for those reasons, we urge a no vote on this bill. Thank you.
Thank you. Any other testimony in opposition? Yes, Department of Insurance, Mr. Martinez.
Michael Martinez here on behalf of the Department of Insurance. We currently have no position on this bill. We continue to analyze it, but we did want to at least clarify what was stated in the analysis that I guess quote that the Department of Insurance has no problem with the bill. We wanted to at least clarify that the initial set of amendments, we had approached the sponsor in the author's office to ensure that the initial code section was in which the bill was being the amendments were taken in as reflected in the bill, that it did not conflict immediately with AB 315 by Assemblyman Solario, in which we are the sponsor of the bill, regarding the surplus lines. It is a very interesting dynamic now with the Dodd-Frank federal law and how the Department of Insurance does regulate and regulate non-admitted insurers after July 21st, including captive insurers. And so we are, again, analyzing the bill, but just wanted to clarify that that was the context in which the Department of Insurance having the problem was just wanting to make sure that it did not immediately conflict with AB 315. So again, the recent amendments put it into a different code section, and now that the department is continuing to analyze, given in the context of the federal Dodd-Frank Act.
Thank you so much. There's a question by Senator Gaines.
Yeah, I just I'm just looking for some clarification in terms of what this is exactly doing. Is it allowing a captive insurer to satisfy the requirements of the Public Resources Code? And is that currently required by a regular insurer versus a captive?
No. Senator, let me see if the intent of the bill is to permit that which was originally envisioned in the Public Resources Code, that if a pure captive insurer met the statutory requirement, that they could provide financial assurance through a captive insurance company. Subsequently, Cal Recycle has, in our opinion, misinterpreted that. We are simply clarifying the insurance code. We are not in any manner relaxing the Public Resources Code. So the answer is we are permitted, we hope, to go back to Cal Recycle and permit the use for our landfills, solid waste landfills, the same financial assurance mechanism that we now use for our hazardous waste.
Okay, but
that's all.
I'm trying to, I guess,
Senator Gaines, there are 12 distinct financial assurance mechanisms that are currently approved by Cal Recycle. So there are letters of credit, there are other assets, there are trust funds, there are a number of them, and so those are available to them. The question then is will Cal Recycle be able to approve or disapprove the use of a captive insurance mechanism, and what conditions might they impose? Our concern is that this measure requires that to be done, that they cannot regulate or condition it, and that they say that it will raise the state's unfunded liability, and therefore they will come after the rest of us who are providing our financial assurance through other mechanisms, raising our costs. Now, as I mentioned in my testimony, I cannot prove or disprove those statements. That is what Cal Recycle has told us, is that that may occur. And until we have the ability to flesh that out and know that, then we need to be of the view that this may raise our cost and therefore come to our detriment. We would then have to raise our rates.
Okay, but just a point of clarification, it sounds like under Dodd-Frank, the Department of Insurance is now responsible for regulating a captive?
Actually, I think Dodd-Frank elevates...
I think that was Mr. Martinez's point, wasn't it? I thought he said
they were
not admitted and captives.
Senator, it is not a question of who's regulating that. It is a question in this case as to whether Cal Recycle must accept it or be able to condition it.
I am concerned from a regulatory standpoint.
Let me hear from the Department of Insurance first. Clarify what was said in regards to this matter.
Sure. Michael Martinez here on behalf of the Department of Insurance. And just to piggyback on what I had said before is that we are, again, continuing to look at this in the context of the federal Dodd-Frank. It's a pretty big bill and a federal law. And with that being said, there are going to be some shifts in how California State, in this case, the California State Insurance Regulator oversees the captive insurance. The primary regulator for the captive insurer will continue to be the state where the insurer is admitted. And so in this case, the state is responsible for establishing capital and surplus requirements, among other requirements, but just that exclusive rights to the home state of the insured for this sort of regulation. Again, it depends on where the insurer is admitted.
Okay, I'm comfortable with that. If the Insurance Department of Vermont is overseeing financial viability of that captive, I'm comfortable, and there's a clear distinction between onshore and offshore when it comes to captives. So, yeah,
and I would just add that we've had this kind of captive insurance in place here in California without incidents, and there's definitely the capacity there. I know there's a concern by the opposition that maybe Cal Recycle may somehow, increase the burden on others. This bill doesn't require that. We definitely, though, do want to spend more time with the opposition to hear what their concerns are. I know it was mentioned that that this bill is brand new, but the most recent amendment that we made, we just added a section rather than amended a section, but the language is the same. Again, do want to spend more time with the opposition on what their concerns are, and if we need to do some additional work to satisfy what they think might be additional burdens to them, we'd like to hear that. But you all have a copy of the bill, and again, the language hasn't really changed. I ask for your support.
Senator Liu?
I have a question. Is captive insurance generally riskier than non-captive insurance?
No, would be one answer. One reason a company creates a captive insurance is because it's unavailable in the commercial marketplace. That's why we have California Earthquake Authority, because insurers wouldn't write homeowners if it was required to write earthquake. Back in the 1980s, you could not find commercial coverage for landfills. It was impossible. Many, many entities create captive insurance. Of the Fortune 100, I dare say 95 have captive insurers. Of the entities that comprise the Dow, all 30 have captive insurers. It's a very standard technique. It promotes underwriting. We have an A- best rating. So if there's a vibrant commercial marketplace, it might be better to get a commercial insurer. If there's an absence of coverage in a commercial marketplace, the only alternative you have is a captive insurer. We don't rely on it. We have a diversity of financial assurance.
And why don't you want to be, what's the issue about not being required to be a California admitted insurer?
because we cannot qualify under the laws of the state of California because we are a pure captive. We write no one else other than our own facilities. We do not take all comers. We're not a commercial carrier. Our bylaws restrict us to doing only waste management facilities because we have a thorough knowledge of our own facilities, and we can underwrite and tailor the policy to cover precisely that need.
What happens now if you can't?
We are buying letters of credit, bonds, and other documents, other instruments and securities. We've been prohibited by CalRecycle for the last 5 or 6 years from using captive insurance. They recently increased the FA, the financial assurance requirements. We went back to them and said, would you now allow us some opportunity to diversify our financial assurance portfolio? We were denied captive insurance. I think it reveals a lack of understanding and an antipathy towards captive insurance. We're permitted by one regulatory entity in the state of California, an entity that Mr. Prea's client doesn't really have to wrestle with. We are denied another. We're asking for regulatory consistency. We petitioned through the APA. It wasn't accepted. What other alternative do we have? We thought we had arranged a mutually satisfactory understanding 13 years ago with Senator Figueroa, at that time Assembly Member Figueroa.
Thank you for that.
Sure.
And so I'm looking at the opposition letters, and Senator Sloan, I apologize in advance.
I haven't seen the letters.
Tell you in advance because I didn't really see these till now. And what they seem to be saying is, okay, if there was a catastrophic failure of this one company, the taxpayers would be holding them back. Generally, when you have an insurance company, they have sort of stuff all over the place. They're sort of diversified in what they insure and so on. Here, it is one company in one specific area, and let's say something happens, I don't know, 10 years from now that just wipes out waste management for some non-related insurance issue, but maybe it's a waste management issue or something like that. I'm just thinking about, we had one reason we're in this recession is we had catastrophic failures on Wall Street, right? And so my only concern is that, and that's what the opposition raised. Now, I may very well vote for this on the floor. I just need to understand it some more, so I won't be able to support it in committee today. But if I understood it better, I might be able to vote on the floor.
Okay.
Senator Corbett.
Thank you, Mr. Chair. I'm having a hard time trying to analyze the opposition because it did come kind of late, right? In fact,
the amendments came late, Senator. So, our opposition, the amendments were in print on the 11th, and our clients didn't have a chance to analyze it and respond until yesterday.
All right. And I don't think I had the ability to read your letter. I just asked for a copy of it from the consultant right now. So I'm just trying to catch up because I don't have this information available. Why was the letter sent so late? Was there opposition earlier in the process?
No, because the bill was substantially amended. I would point to the fact that the bill now affects the particular issue that we're discussing, not captive insurance in some sort of general way. Now it's applying it as it applies to CalRecycle. And our opposition is not to captive insurance per se, and certainly not opposition to Assemblymember Solorio or to waste management. Our concern here is that the folks at CalRecycle have expressed concern about captive insurance, that their view is that there is a risk, an unfunded liability in terms of landfill financial assurance, that being forced to accept this will raise everyone else's obligations in terms of providing financial assurance, and therefore we think that it is unfair that a measure go forward that benefits one company, and again, I don't have any issue with that, but that now comes to the detriment of us. Now, again, the proponents will argue that CalRecycle is wrong. And I'm not going to be here to argue one way or the other. The fact of the matter is that whether there is a rational reason for their concerns about it, or as Mr. Urban indicates, that their opposition is unreasonable, The fact of the matter is that it has a ripple effect, and as the witness from representing the Sierra Club said, these are all parts of a puzzle that must fit together, and therefore it is going to result in, as according to Cal Recycle, increasing the unfunded liability and thereby causing us and others to have to bear a larger burden.
Let me just say something first. I wish I had the opportunity to see this letter earlier, and I wish that the information was made available earlier so that the consultant could have analyzed this for us. And it's just not available for me to analyze. So today, I have to support the bill based on the information that is before me, but would welcome the opportunity to speak to you in opposition further about this as the bill moves on. But I just wanted to make the point, it's very, very difficult for us to analyze this issue that you're bringing forward because we just didn't have it before. I mean, I just got it now. So I think it's only fair to point that out. I would, if this won't take too much time, I would appreciate it if you could sort of give us a brief bit of information as to why specifically you believe it affects the cost or the rates that people may have to pay. I think that's a point you made earlier.
These are the comments that I have not received, but others in our company have received from Cal Recycle. So, again, I'm as I mentioned in my earlier testimony, I cannot prove or disprove it. But the fact of the matter is that all the stakeholders have not had an opportunity to sit around, look at the language that's being proposed, understand what is going to happen and if those concerns are valid or not. And if they are going to raise our rates, then is there something that can be done to prohibit that from occurring? So again, we're not here to testify in opposition to the concept of captive insurance, but the bottom line is that we believe that we are at risk, as well as others, of paying more down the road.
Okay. Well, I'd love to have more information about this as
Be happy
the bill
to.
moves forward.
You know, consistent with her earlier comment, I would ask the courtesy of this committee to support the bill today. I too have not seen the letters. Apparently, some were couriered to our office yesterday evening or something. Have not seen them. I know the committee hasn't had an opportunity to analyze them. I do understand that there's a worry that other companies may experience new costs. If there are, that's not my intent. So I'd like to work in good faith with them on trying to address their concerns, but because the committee nor our office has had the opportunity to assess the concerns, talk to Cal Recycle. Cal Recycle doesn't have a position. I think I'd ask for your courtesy to move this forward, because it was not courteous that they provide us all with such late opposition on an important matter.
Sir, you're moving the bill. Question by Senator Correa.
Yeah, just wanted to ask the author, working with the opposition, again, you just recently amended the bill. We're all concerned about possible unintended consequences here. And given we assume good faith from the author as well as the opposition, what assurances do we have that you'll work with the opposition to make sure that come up with
you have my complete commitment. And again, on this issue of the amendments, you all have a copy of the bill. The amendments were very minor, really moving it from one section to another. And I'll work with the chair and the committee.
That if you don't resolve the issues satisfactory, not to the opposition, but to this committee, as you work with the opposition, and you bring back the bill to this committee.
You have my commitment to work with the chair on that.
This bill goes on to EQ. We could proceed in that manner. I'm still not sure if we can maybe kind of take a head nod if we have the requisite votes for us to pass this bill out today to continue your work on it. There is Plan B, and that is that we are holding a special hearing off the floor on another matter on Monday. We can include you in the file and work your problems out and bring it back on
I just
Monday.
ask for your courtesy again, and we do have another Senate committee that we're going to go to. So in the meantime, we'll work with your office and the opposition.
Okay, Senator Gaines.
I'm just wondering, to clarify the amendment language that Senator Correa was asking about. Ken, could you comment as to what the Department of Insurance
Senator
was
Gaines,
asking for?
What I'm looking for is not a specific amendment language, rather given the deadlines that we have to commit, not wanting to kill the bill. But I think the chair's suggestion is even better, which is if the author would agree, just give these folks a few days to work out a compromise, something that's a win-win for all involved, and have an off-the-floor meeting on Monday of insurance. We're already going to do that for another bill and address both bills at the time.
Will there still be time to send it to EQ? Yes, that's my question. Will it impact the ability for it to be heard in EQ as well?
How will that impact EQ?
When does EQ meet? Do we have staff in the room?
Monday.
Ms. Borton?
I don't think it's...
When is your next EQ hearing set?
Monday the 27th.
So it is Monday the 27th. After, I'm assuming, before or after session, do you know?
Actually, before and after.
How would we be able to... I'm on EQ. I'm feeling caught in this. I want to wait. And how could I... If there's going to be changes or we're voting on something, it's going to be very difficult to understand what's going on. Then that same day going to EQ.
Then why don't we go back to Plan A? We'll have a commitment from the author to bring the bill back to this committee if there's
Mr. Chair,
still work to be done. Yes.
Is there another meeting of the insurance
There's not.
committee? There's not. Okay.
Yes, Mr. Weiland.
I concur in all this. I think I was prepared, and I will support today, but I'm concerned because we don't want to treat those companies unfairly or have a burden because of
I agree, and that's not my intent. And again, we're just hearing this opposition now, and I do want to address it.
Okay. I appreciate that, Assemblyman Solorio, and I know I can rely on your commitment.
Thank you,
Senator Lowenthal.
Yeah, I would prefer now with all this, since I'm on EQ anyway, without prejudice to stay off the bill today. If you have enough votes, let me just see what's going to happen.
Okay, very good. But if not, I hope you would remain open.
I'll then listen, but I would prefer not to if it's possible, because I think that there's a lot in fluctuation. I'm going to be voting on this bill on Monday again. I want to understand what's happening.
Yes, Senator Liu.
So based on your commitment, I won't be voting for the bill today unless you need my vote, in which case I'll make sure it doesn't die.
Very good. Thank you. Much appreciated.
You may need your vote. I'm not.
Do we have a motion?
To the chair.
Mr. Chair.
Are you okay with this commitment to work with the...
I believe Mr. Solorio to be a very honorable man. I have no commitment, no issue with that.
Thank you very much.
Mr. Chair, just for clarification, so we'll take a vote on this measure today.
Yes.
It will then move to EQ.
Right.
There'll be an opportunity for the parties to work and maybe even work something out as the bill moves on to the next committee. Is that correct? Right. Okay, very good. And I'll support it today. I would have liked to have the benefit of additional analysis on the opposition issues, but I will support it today and be glad to keep an eye on what's going on as it moves on to the next committee.
Thank you.
There's already a motion. Ditto over there.
Ditto.
Would you like to close?
I ask for your aye vote.
Call the roll. With as amended?
Yes, do pass as amended to EQ. Calderon?
Aye.
Calderon, aye. Gaines? Aye. Gaines, aye. Anderson? Aye. Anderson, aye. Corbett? Aye. Corbett, aye. Correa?
Aye.
Correa, aye. Liu? Lowenthal? Price? Aye. Price, aye. Weiland? Aye. Weiland, aye. That measure has 7 votes.
7 votes. You have sufficient votes. Your bill is out.
Thank you very much. Thank you
for working with
senators.
us. Thank you,
Thank
witnesses. I believe that completes our file today. Well, we do have bills on file, on call, that we are going to lift. Starting with the first bill and working our way down, please call the absent numbers. 228. No, that's the one we're moving.
Right.
That's not. I'm not going to vote on that today.
Item number 2, 480, AB 480, and we just called the roll on it. That one's out.
What about item number 1?
AB 689.
It's been put over.
AB 689, Anderson.
That's an
Anderson, aye. Lowenthal.
This is
AB 689.
aye.
Lowenthal, aye. That measure has 9 votes.
Okay.
Item number
Five.
1024.
1024.
Corbett. Aye. Corbett, aye. Blue. Aye. Blue, aye. Lowenthal. Price.
Aye. Lowenthal.
Lowenthal, aye. Price, aye.
715 is our version of that. Committee members were
8 to 1.
8 to 1. That vote is out. There's a consent file, members. Items 6, 7, 8, and 9. Call the absent members.
Anderson. Aye. Anderson, aye. Lou. Aye. Lou, aye. Lowenthal.
Aye.
Lowenthal, aye. Wyland.
Aye.
Wyland,
And
aye.
to
That
withhold
has
item
9
number
votes.
1.
That had 5 votes?
Yes. I mean, no, that has 9 votes.
Oh, 9 votes. Okay, that bill is out. Does that do it? That completes our business for today. Thank you.